Internationally, the Brexit story is hogging the headlines. British Prime Minister Theresa May managed to get approval from her cabinet colleagues on a several hundred-page UK-EU agreement on the former exiting the European Union. But that's only the first hurdle. Then in the US, inflation appears muted, and that might see the US Fed Reserve taking its foot off the interest rate pedal a little. But will it? And the Chinese have indicated their willingness to make some concessions to the United States ahead of a meeting between the two countries' leaders at the G20 in Argentina. And here at home, the Constitutional Review Committee in Parliament has advised that Parliament go ahead and amend the Constitution to explicitly indicate the circumstances under which expropriation of land without compensation can take place. So how has all this affected currency markets and broader markets? Well, we chat to Jameel Ahmad. He's the Global Head of Currency Strategy and Market Research at FXTM. Jameel, so Theresa May has got past the first hurdle, getting approval from her cabinet colleagues on this draft Brexit agreement with the EU. But the next phase is not likely to be straightforward. What needs to happen next? And in the meantime, how has pound sterling been doing?
Very good question. What needs to happen next is for Parliament to actually agree to the terms that Theresa May has finally secured after many months of uncertainty and intense, protracted negotiations with the European Union over Brexit. Now, the markets are not convinced that she's going to get the support that she needs, and then there's going to be a lot of opposition towards the terms that have been secured, which is why there's been so much volatility in the financial markets today, specifically in the British pound over Brexit. Because markets are not convinced, we're not seeing that much buying attraction, which is weighed on the sterling because it's traded back below the 129 and it's trading as low as 128, dangerously below 128 as we speak right now. Now, this is also having an impact on other asset classes as well, because it's highlighting potential political uncertainty in a developed economy, which is weighing on some emerging market assets as well as a result of investor not being able to take on risk. And the most important development to monitor now is whether this encourages another push for the dollar divergence story, and whether this actually pushes the US dollar higher as some sort of a safety asset, just because we're seeing this return of political uncertainty in the United Kingdom, and it's also somewhat impacting Europe as well.
Do you think a vote of no confidence in Theresa May by her party is a real possibility? Because many a backbencher in her party are not in favour of the agreement, which postpones the time that the UK can independently make trade deals with other nations.
This is a really big problem, and it's an ongoing challenge. We've seen the question marks raised over the UK Prime Minister's future time and time again. So far, there hasn't been a leadership challenge as such, but it's not something that we can rule out. And again, we can say this is a very big negative for the market. It's a risk for the British pound. Now, what the problem is that the terms that are secured, it's seen on headline as not being what people wanted if they voted for Brexit. So this transition could take up to 2 years. It will take up to 2 years, sorry. And it does appear that these terms indicate that the United Kingdom cannot make new trade deals outside of Europe until it leaves Europe, which kind of defeats the prospects of those who wanted to vote for Brexit. This is why there's so much opposition, and there's controversy over this deal. There was going to be controversy anyway. But this is mainly why the market's so unconvinced for the pound. The pound is not trading higher for sure. It's trading negatively because nobody knows whether this is actually going to be pushed through.
Yeah. So one last question on the UK and the whole Brexit story. So if it doesn't go through, Parliament doesn't push it through, and Theresa May goes and all the rest of it, and there's an election in the UK and all the rest of it, what does that mean? Are we heading towards a hard Brexit, or does that then present an opportunity for another referendum on whether people want to leave the EU?
The consistent narrative from those in government, including the UK Prime Minister Theresa May, is that there will not be another referendum. Of course, it's something that keeps you on speculating. It's something that many people want. However, they're saying it's not going to happen. What we can say is that if this deal doesn't get pushed through, and the terms are obviously those that are going to be agreed, and looks like the best deal the United Kingdom can get, it means that just 4 months from now, the UK could enter Brexit without any deal at all, and that the risk of a hard Brexit do significantly increase. Because this is seen as it's not a soft Brexit, it's not a hard Brexit, but it's seen as an orderly Brexit that both counterparts have agreed to. If this deal does not get through, we're going to see a lot more volatility in the pound. It could impact global financial markets quite significantly as well, but not as much as when the vote took place, which ultimately sums up that the risks for a weaker pound are still significant, and there's probably more downside risk for the British pound than upside potential from a Brexit deal actually being finalised.
Are global markets becoming increasingly optimistic about the toning down of the trade war tensions between the US and China, particularly in light of China making some concessions today? And how's that played out in those countries' respective currencies?
It has somewhat, but the problem is that we are less than a few weeks away from, US President Trump and his Chinese counterparts, very senior Chinese authorities, are scheduled to sit down. And when they sit down, the indications from President Trump a few weeks ago was that it's because they are close to a deal. Now, the market's not convinced that this optimism is sincere, which is why the market's not moved as positively as you would expect from the news of Chinese making concessions or the unexpected news just 2-3 weeks ago that a trade deal is possible as early as later this month. This is why the market has not moved positively in terms of stock markets. US markets are trading lower as we speak now. Emerging market asset classes are actually being pressured by a resurgence in strength in the US dollar. So it suggests that investors basically don't think that all the hurdles have been passed yet in order to be confident that a trade deal will be met, which is obviously what we all want because it would be great for global market sentiment. It would be good for the global economy, but doubts remain over whether this deal will really be possible.
For a while now, markets have been concerned about the intensity with which US interest rates might be raised. But now there's talk that with a slowing inflation picture in the United States, the Fed may not be so aggressive, which would be positive for emerging market currencies. But given what you've just said about other issues above, it looks as though emerging market currencies are stuffed either way.
Yeah, the problem is that it comes down to external uncertainties, whether it's trade tensions, the unknowns there, Brexit, Italy. There's still a massive layer of political risk around the developed markets, and this is what's still dominating market sentiment. The US Federal Reserve story and the interest rate policy, it is a factor, we can't deny that, but it's not the main catalyst that's driving financial market movements today, and it hasn't been for quite some time. So this is why the comments from Powell, it's positive if it means lower interest rate intention cycle, but it's not convincing because there's uncertainties elsewhere that are making investors very nervous. And when there's nervousness around investor sentiment, it's only natural that emerging market sentiment is those at risk of falling as well, such as other risky assets like oil. The tumble in oil over the past 4 days has been dramatic, and it does result in a lot of different external uncertainties and how this can really impact investor appetite towards risk.
Yeah, that brings me nicely to my next question, which is how are you seeing the dynamics of the oil market as the benchmark oil prices have behaved in a very interesting manner this week? Is that market structurally long, and will a Saudi Arabia oil output cut early next year really serve to keep prices elevated or not?
I'll tell you what it is. This news over another oil price crash because the oil's fallen around $20 over the past couple of weeks. It's dropped over 7% just 2 days ago. It's not good for oil exporters, but I think it's appropriate for the global economy and the global markets, given our current environment around uncertainties, around emerging markets, around President Trump and the trade tensions, around Brexit. There's a lot of concerns over global economic growth.
That was Jameel Ahmad. He's the Global Head of Currency Strategy and Market Research at FXTM.